Hi everybody, Niall Paterson here in the Sky News Daily studio where once again we're examining a set of economic data. It's about inflation this time, which we are told is running at 2.3%, considerably above the Bank of England target of 2%, and it will have an effect on prices and could potentially have an effect on jobs as well. All the while, of course, the Chancellor Rachel Reeves, who recently, of course, delivered her budget, saying that growth is her overwhelming priority. Joining us to walk us through the figures, our economics and data editor, Ed Conway. Ed, let's just start with the headlines. Inflation, where are we?
Okay, so if we take a step back, inflation is the rate at which prices are going up or sometimes down, mostly up. And it went up from 1.7% in September to 2.3% in October. Quite a big jump, but like a lot of that was expected because this was the month where the price cap came in and those energy bills that we're all paying, they went up. So that kind of feeds in.
Everything is still going up, isn't it?
Well, I think for all of us, you look at what you're spending your money on now and it just feels like more than that. And that's because actually it is more than that. If you look at the price of, the average shopping basket, which is what inflation is, look at it not just in the past year, but in the past kind of 3 years, and it's up by like 25% or so. And so I think that's the thing. Like economists like to fixate on this number, and for understandable reasons, because that's what the Bank of England is focusing on all the time. But that number is just looking back the last year. For a lot of us, our lived experience goes back longer than that. We've gone to this higher price world. But these numbers don't necessarily point towards a return of the bad old days. You're not seeing some sudden kind of uptick that is ominous. We're not in that world right now, touch wood.
And actually, looking at the data, it does appear that the changes to the energy price cap, that kind of uppermost level that we could all spend on our energy costs, that is largely responsible for this increase.
That's the main thing, by far and away, actually. It's energy prices, and most other things are kind of more or less around that kind of normal inflation level. And I think then there's a kind of an interesting but quite imponderable conversation about, okay, what happens in Ukraine? What does that do to gas prices? What in turn does the Trump election do to people's guessing of what's going to happen to energy prices? There's loads of stuff, some of which could push prices up if things got kind of escalated, but some of which could push prices down quite a lot, actually, if, for instance, it looks like there's going to be a ceasefire and it looks like Trump is going to come in and try and end it.
Just to be absolutely clear, a 0.6% rise in inflation compared to the expected 0.5%, disappointing, but not necessarily overly concerning at this point.
It's not the big thing that's kind of changing people's minds about what's happening to interest rates in the future. And obviously that's the main thing. People look at this and they say, what's going to happen to interest rates? I looked at the charts today. Compared with the jump that interest rate expectations had after the budget, this is piddling in comparison.
Well, remind us why that base rate, the interest rate set by the Bank of England, why that actually ultimately matters.
Okay, so you've got inflation, and the inflation is just a measure of how fast prices are rising. And if you're the Bank of England, you want to keep inflation low to around 2%. That's your target. They've basically got one big fat tool to deal with that, and that's interest rates. Lift interest rates, it means life gets more expensive for people. They go out and spend less. And as a result of spending less, if you're in a shop trying to encourage people to come in to buy, you might be like, oh, well, let's put my prices down rather than up. You see what I mean?
Yeah,
higher interest rates means it bears down on the economy and then prices start to go down. And that's why interest rates are high at the moment. They're, high compared with what they were for previous years. They're still up at 4.75%. The Bank of England has cut them a couple of times. And now the question is, how far down are they going to go? Back in September, so before the budget, the expectation was by next summer, they were going to be getting down to around 3.5%. That's quite a big fall, isn't it?
Yeah.
But then came the budget, and then the government said, we're going to spend more money and we're going to borrow more. And those two things together mean you've got more money flowing around the economy.
Which means
the Bank of England,
inflation.
More inflation. And the Bank of England has raised their inflation forecast, and critically, people now think that by next summer, instead of going down to 3.5%, they're more likely to be above 4%. And today's higher than expected inflation, in a teeny way, it kind of made expectations for interest rates next year a bit higher. But the main thing, like right now, is the budget and the implications of it.
But what of the national insurance changes that Rachel Reeves announced in the budget? Because didn't people warn of the potential for that to have what's known as an inflationary effect?
I mean, it definitely could be inflationary. They are going to raise the employer's rate of national insurance. So that national insurance is split into two halves. Half of it is paid by the employee. So, you see that on your paycheck. And then the other half is paid by the employer's national insurance. And it's the employer's bit that Labour have increased quite considerably. And I mean, ultimately, all taxes are paid by people.
Yeah.
It's not like there's some monolithic kind of, we can pay taxes. In the end,
but I mean, you'd have to see a rise in prices.
But the business can then decide whether are they going to pay for that by absorbing the cost? Are they going to pay for that by raising their prices and earning a bit more money in order to absorb that cost? Are they going to pay for it by letting people go, which is another possibility? Are they going to pay for it by essentially kind of taking it off people's earnings? So in the end, it will affect the way that businesses function. And the way that business function, what are businesses? They're collectives of people with balance sheets, and that in turn affects the employees.
But when Rachel Reeves, the Chancellor, announced this at the dispatch box, you're essentially implying that she did this in the full knowledge that an increase to employer national insurance contributions could mean job losses, could mean increased prices.
But I think she knows that. She's certainly smart enough to know that. But they came into office making very big promises at the election, saying that they weren't going to raise any of the major taxes. They have raised one of the major taxes. But
on working people was to get out of jail.
Well, there's a small print which says it's not on your payslip. And it's not on your payslip. But we all end up having to pay it through some form of consequence. And those economic consequences, we're kind of working them out now. And, Tesco said the other day it's going to be an enormous bill for them. And then you ask the question, do you then see them raising their prices as a result? So you could see inflationary consequences of this. You could see inflationary consequences of the fact that the government wants to invest and spend more money, because that's more money flowing around the economy, going into people's pockets potentially. But by the same token, there are some things they haven't done. They haven't raised fuel duty. That would have pushed up inflation quite a bit because that goes straight into your petrol cost. So there's a few things which might well feed in the coming months.
Ed, hold that thought, because we're going to take a very quick break. When we come back, we'll continue to discuss, the politics of the decisions made by Rachel Reeves and this Labour government. Back in a second. Welcome back to the podcast. Ed Conway still with us, and we're discussing inflation figures on the podcast, but really the kind of real world effects that they are having. I mean, you said before the break, Ed, that Rachel Reeves was smart enough to know that the national insurance measures, and indeed some of the other measures announced in the budget, would or could lead to price hikes and to job losses. But I suppose the problem is that Joe Public doesn't always recognise that.
It takes time to filter in, doesn't it? For the cost of living crisis, we were kind of banging on about inflation for a while before it really kind of started to be something that's felt. And I think people are still absorbing that now, and that's understandable. This budget was a massive deal. The fact that we're still talking about it weeks and weeks afterwards underlines that this was not the small thing that the manifesto implied, kind of business as usual. It is a massive change to the way that we conceive of this country. The tax burden has never, ever been as high as the plans that are in train at the moment. So it's going to take a while for us to work out, okay, is that something that kind of works in this economy, or is it not compatible?
Can we apply that same argument then to growth? Because ultimately that was Rachel Reeves' stated ambition in opposition and as soon as she set foot in number 11, growing the size of the economy, growing our way out of this massive tax burden.
Yeah, there was a very specific pledge to have the fastest growing economy in the G7. It's interestingly, the government isn't making that pledge quite so vociferously and loudly as they were before the election, because I don't see how they can do it. Let's leave the policies aside, let's leave the budget aside. It's just really hard to beat America. American growth is just almost always really, really strong. It's not hard to beat Italy. Italy is usually at the bottom of the ranking of G7 members. The US is just, for reasons that economists still can't quite get their head around, just has this productivity advantage. They just have more growth most of the time.
Okay, so we might not be top of the G7, but, I mean, is the ambition to see significant growth in this country? Has Rachel Reeves' gamble paid off? Are we going to have to wait, though?
So, you're going to have to wait and see. Because if you just look at what economists are forecasting, okay, it doesn't look very good for Rachel Reeves, because city forecasters, they're always looking at this, looking at what the government's doing, looking at how the economy is looking. They basically didn't change their numbers after the budget. However, most economist models aren't very good at trying to judge how quickly investment can actually boost economic growth. And they're generally speaking a little bit pessimistic about that. So you could make the case, and I I would incline towards this, that the kind of investment that the government has talked about in the budget, if it's done smartly, really could boost growth. And that would be good for all of us. But it's not there in the numbers so far.
Do you detect amongst the business people that you speak to, and I know you speak to them regularly, confidence in this government's capabilities when it comes to business? There was a huge charm offensive that went on ahead of the general election. And all the goodwill that Labour appeared to have built up with the business community looks to have dissipated almost entirely.
Yeah, I think that's pretty fair. I think people are quite disappointed. The national insurance thing, the scale of it and the way that it's been portrayed as well, I think they feel it wasn't quite as honest as it could have been. So I think there is a bit of disaffection. But I think businesses they're still kind of open and ready, and they're hoping that the mission can work. I think what they're nervous about to some extent is, does the government really have a clear strategy about how it's actually going to generate that growth? Because it wasn't all that obvious from the budget that it did. It's got various big numbers, but how you turn those big numbers into actual growth, that's still unanswered. And only just the other day, the Treasury released this document saying, here's what we think is important when it comes to growing the economy and industrial strategy. It was like a discussion document that might be the starting point of a kind of 5-year-long conversation, rather than here's our plan, here's what we're doing, here's our strategy.
So, but personally, looking at the state of the economy, looking at the figures, looking at that budget, I mean, this time next year, will you and I be all smiles and talking about the UK economy going great guns? Are we going to be having the same sort of discussion, do you think?
Under all of everything else, I'm a bit of, I confess, of an optimist. And
there's one in the room at least.
I think at some point, we are due a bit of a bounce.
Yeah.
This country, we've had a tough time, even tough by the standards of most of the rest of the G7.
20 years almost.
For a long time, for a long, long time. And I think that there's a government with some degree of stability. I think they need to provide more clarity about what their plan is, because I think still a lot of people are waiting on that. But at some point, I think there could be more investment coming into this country. And if you think about what's happening in the US, I mean, that could be very business friendly with Donald Trump coming in. But by the same token, it can be very chaotic. And you have the chaos there, and frankly, there's going to be chaos potentially in France. What happens with the French presidential elections? There's chaos in Germany. Look at what's happening. The German government has basically collapsed. So the UK does have an opportunity to be this island of calm and stability. And I don't see any reason why there couldn't be a positive story from there. But economists are supposed to be all dismal and depressed about everything.
Okay, well, here's your final chance. But for the time being, prices are still going up, and potentially we could be seeing job losses in business.
Yeah, but they're not going up anywhere near as much as they were in the past. And that shift that we've had in higher prices seems to go up. Ukraine, I'm permanently depressed about what's happening in Ukraine. The flip side of that is, it does mean maybe gas prices might go down in the future if that de-escalates, and if there is a kind of some sort of a ceasefire, whatever that portends for Europe in the long run. So there are some positives, I think, to take from all of that.
And that's a lot for this edition of The Daily. If you want to hear Ed's analysis about the inflation figures, just head to skynews.com. If you want to hear how the farmers felt about inheritance tax, another measure in the budget, you can listen to yesterday's podcast. We'll see you again, same time tomorrow.